Hello and welcome to Wyckoff Training Academy. This is Hello and welcome to Wyckoff Training Academy. This is a session wherein I would be discussing about few markets and aligning all the indicators together. As you all can see, this is a FCPO crude palm oil futures chart, which is commonly traded in Malaysia. I've applied version 188, version 185, version 155 to it. This is all upgraded versions of based on trading view upgrade, which he which it had like for sorry coding software. So I've drawn support resistance in black. So what are these support resistance based on? First thing first, uh, version 188 speaks like it shows you top and bottom and entry spot, a perfect entry spot wherein you can plan your trades either for a buying opportunity or for a selling opportunity. And I would like to make one thing clear. This is an international, like this is an English session, and this is only intended for international audience. As I have already completed, or about to complete the sessions for Indians in Hindi, and now I would be focusing more on international markets like XUSD, Euro USD, JBP USD, and some other international indexes or indices or index. So, how I plan my trade and how I trade normally based on is aligning version 188 and aligning version 185, and then looking for price action like by way of tape reading, the way Wyckoff used to do Richard D. Wyckoff. The reason for coming up all these tools, like many people are approaching and they are asking many questions on this one. Like in previous session, I tried to cover um, uh, to a to a like detail in a detailed way so that people can understand what basically my indicators and my the things which I've improvised, adapted, and coded in a way like which are all rooted back to Wyckoff, original work of Wyckoff. So Wyckoff original work is like if there is an accumulation. After that accumulation phase, there has to be a markup. Then there has to be a distribution phase. Then after distribution, there has to be a markdown. So in layman terms, or like in today's era, we call it as the markup phase would be normally referred to as uptrend. A markdown phase would refer to as a downtrend. So keeping this thing in eye, like in context, I've developed all these tools, which are like all the tools are working based on price and volume. Now, many people say, and many people come to me and they ask, like, you're only talking about volume and all this stuff. So all the work of Wyckoff is only dedicated in identifying the footprints of composite operator. Wyckoff used to, which we normally call them as or refer to them as institutional investment investors. So institutional investors or smart money. There are many terms which are coined by many people, many traders, and everything boils down to one thing: identifying the buying demand and supply based on how the people with deep pockets plan their trades. So just we are in it's a quest to identify their footprints, and if we are able to identify the footprints of smart money or institutional investors or composite operator, which Wyckoff referred to them as, we would plan a trade. If market is going upwards and we see prices are going upwards and we see the commitment of demand that price it can take the market up, then we would go open a buy position. And if the market like if has a greater commitment than demand and it has the potential to take the market downward, then we would open a sell position. or sell order. So this is what we are keeping in mind. Now, many people they come up with like they I have been trading Wyckoff and I've been like doing analysis of based on Wyckoff since more than 15, 16 years. I think it is like more than 17 years. I've been through phase analysis. You tell me whatever the Wyckoff work is, the Wyckoff work was dedicated to like phase analysis or like market cycles or waves, or you say what you can say schematic is a part of like phase analysis is normally referred to as schematic, and after that like point and figure, which was not that much like we would say point and figures also. We consider this one because there are many traders who have contributed in this way uh, by way of point and figure. And after that, you can say what else I can say like phase analysis and what Wyckoff has like what I like there are three laws of Wyckoff and like apart from this like phase analysis and schematic point and figure and tape reading. So if you see the work of Wyckoff, it is spread like it's spread across this five to seven things. So what I found is like schematic and when I played around with schematic and phase analysis, this is something which is unrealistic. Why it is unrealistic? I'm just this session is only for like sharing my whatever things I learned about Wyckoff. I'll not none of my trading is involved anything apart from Wyckoff. So phase analysis and schematic, like for example, if we identify any accumulation phase, then there has to be a preliminary buying or supply, and after that we identify phase A, then testing is occurring at this bottom level, then it is referred to as phase B, and phase C is when the price is going to go upwards, and then phase D, like phase C, and then phase D, and then phase E, and it keeps on like after a spring or like for example secondary test would be in phase B and phase A, and automatic rally or automatic reaction, whatever you want to name it. So it was something which is like this, and there is last LPS, last point of support, or you can say last point of supply. Then there are many new nomenclature to add it to this one. So in an accumulation, you can say last point of support, and then backing up action, or which is normally referred as last LPS, last point of support. So these things, to be honest and frank, traders, I haven't found it to be very consistent in nature. That is the reason I have skipped this idea, and I've skipped this because unlike any trader, I also want to make money. I'm here to make money by way of trading market in a consistent manner, wherein the opportunities should fall into my lap on a consistent way and in a consistent manner. But that is not the case what happens with phase analysis. To be honest and frank, if you people are doing phase analysis, if you're honest with your work and if you're honestly trying to find out phase analysis, you would agree with me, you cannot find it on a consistent basis. And sometimes your higher time frames gives you accumulation, and sometimes your lower time frame says to you it is a distribution. And same analysis would go out for distribution, and same would go for accumulation. In distribution, it would be a UTAD or upthrust after distribution, or upthrust normally is which we refer to as. This all will happen in a phase C. So this is what I believe in, like what I have taken out of this thing. So this is not consistent. This was not consistent with me, and it will not be consistent with any trader, because I've tutored many people who have come out from this background, wherein they learn schematic. I'll not take the name of the tutors who are so-called trading or training in Golden Gate universities, but or prominent universities, but at the end of the day, they also are facing difficulty in this one. They are not consistent, though they are selling the course for thousands and thousands of dollars. But I don't, it doesn't resonate with me. Hope maybe I'm of a different thinking kind of like I'm of a different thinking, or I don't believe in, or I don't want things to be very selective in nature, and wherein we go for a phase analysis. At the end of the day, we find it very difficult to manage or take a trade wherein or wherein the probability and assessing the demand and supply makes it very difficult for us to do, because there are certain times when, like, if we say we're going for a phase analysis, like we have to have A B C and at least D. We should have at least four phases in a row, or at least we should have three phases in a row. So there are sometimes market will not give you any phase and it will go upwards, or it will give you only like there won't be any preliminary supply or preliminary demand, and there would be a automatic reaction or automatic rally. But after that, you won't see any test taking place on the particular level. So these are the logical issues which are logical problems which a trader faces during his quest or her quest of identifying trading. So I don't have anything more to say to on this one. But what I have understood based on this one, like what was the purpose of Wyckoff doing this activity, and why many people ask me why you only say to like why you only refer volume and price to be your key component in defining Wyckoff's work. Wyckoff has like it is a like David Wise used to tell frequently that uh, it was Wyckoff who said like whenever there is a change in or whenever um, waves or whenever the price action is starting to shorten in time and distance, or they are short try to or they are or there is a increment in any sort of price action with the uh, like by quantifying with the by when he which by which he mean to say is like when time and distance is a new trend or new move has started uh, in terms of time and distance. So if we try to like in both the ways, when he said when like price action is starting to decrease in size, like time and distance, and or either ways, price action is starting to increase in time and distance. Like the main two qualities, which like the main two quantifiable or main two variables which he used was time and distance. So now at his particular time, there was no so nothing was there in relation to price or volume. There was no chart. What he used to do is like he used to get the tape, he used to get the quantities and price from the exchange, and he used to make a chart by his hand. And those were the days when there was no charting tool, no nothing, no charts, nothing was there. So you can see he used to get the tape and get the ticker tape from the exchange, and he used to plot the rates, plot the prices. So that's the reason I don't find this thing to be very schematic. And coming back to my point, what Wyckoff intended was that's the reason we use price and volume to assess. Price is something which in wherein you can see like distance. But when it comes to time, we cannot quantify time. Though there are many ways to quantify time, but instead of time and distance, that means what he intended was to see the underlining power, which is underlining asset, which was quantity, the amount of purchase taken place on, like for example, if a price is like if any A stock is trading on a price of like $100. So how much quantity has been traded on this particular thing? like for example 500 quantities. So that this is how we can relate quantity with volume. So no, everybody knows that we don't get exact quantity. No exchange, no, like whatever market you're trading, you will not get any exact quantity released by the exchange, because they are always kept hidden from the normal traders. So you'll not get the exact quantity 50 or 500 or like 5 or 5,000 quantity or 5 lakh quantities. So to assess the market in a in the nearest which could be nearest to the learning, or which could be the nearest to the Wyckoff training, Wyckoff uh, methodology, Richard D. Wyckoff's work, is to get it aligned or get it uh, like to assess it with the help of price and volume correlation. So what I have observed over a period of time, if we apply price and volume in a right context, we can at least uh, this is what my experience is based on. Like I'm a veteran trader, like for more than 15, 16 years of experience. And I have whatever tools I've made on the teaching of Wyckoff. And what teaching I've applied is simple, straightforward. If Wyckoff, I believe in say and one thing which Wyckoff said is like what I understood from all his teaching is like there is a transition phase between when if per se price is coming down, there would be a transition phase wherein price would go into an accumulation phase, and after that accumulation phase, price will go for a markup or a uptrend. So what is accumulation phase? Accumulation phase, I'm not talking about schematic phase analysis. I'm talking about this phase. It is nothing but an exchange of hand taking place from supply to demand. If in this accumulation, supply is exchanging hand, a transition of power is taking place from supply to demand. And if you are able to identify this with the help of uh, most like you can, I'll not say accurate, but most realistic tool and logical tools, you would be in a position to take a profitable trade in the direction of the speculated, or you can say forecasted trend. So having said that, if this is a distribution, so what would happen in distribution phase? It is a transition of or exchange of hand taking place from demand to supply. So if this is going to happen, and if you're having tools at your disposal which are logical and realistic in nature, and which can show you this transition taking place, then you would be in a better position to open a sell order and take the benefit of the price fall. In say as you did on uh, in the uptrend, which was an uptrend, or like say markup, or like in downtrend you can say markdown. So this is it. Like, this is it, and you have I whatever tools I have made is simple and straightforward, and they don't have anything which is much more complex in nature. And I only develop all the tools just based on this one. So for making this thing realistic, what I have did is I have come up with three indicators. Like I made more than hundred of indicators, but I have come up with this tool, top and bottom. Top and bottom give us all my indicators, like all 155, 185, 188. All these indicators are the calculation based on or correlation or statistical or mathematical correlations between price and volume. As I mentioned earlier, price and volume are the entities wherein we can say the time and distance calculation. This is the closest way to assess what, like, if we quantify it into like quantity, price and quantity, or price or volume, you can say. So this is the closest way we can assess the market in terms of demand and supply. So for assessing demand and supply, which has a greater power to pull the market towards itself, either upwards or downwards, these are the tools which we can use. These tools are purely and like as I mentioned, they are based on price and volume. and I find volume to be very definitive whenever it comes to taking a decision whether the market is going to go upwards or not downwards. So, like for example, I use 188 version just to identify, as I mentioned, these are price and this is 188 version, or all the versions are based on price and volume. It gives me a bottom and it gives me a top. That's it. So this is something wherein you can say the it is a premise, like it is made like it gives us an understanding shortening of thrust. If the I don't why I'm not using this term in my indicator, because there are many people who don't understand what is shortening of thrust. So there is shortening of thrust in terms of waves, in terms of highs, in terms of lows, and everything. So I'll not go into this thing because this is much more a bit technical kind of a thing for a trader who don't know Wyckoff work. So instead of that, I use top and bottom. So it is giving us the transition, which is like giving us a area of price action wherein we are about to see a trend change. And in the same manner, it is also in when it prices coming downwards, it is giving us a fair idea or an indication that either the price might turn from this particular point, or there would be a congestion, or price would go in a sideways, because market has a tendency to go from accumulation to reaccumulation, then to distribution, then to redistribution. So for you to identify this thing, you have to have a price cessation area, or where the price is going to go get into a transition phase, wherein there would be an exchange of high hand from demand to supply, or in this case, supply to demand. As you can see in FCPO price is revolving in range. So for us, this could be an accumulation. For us, this could be a distribution. So I always tell my students to focus on what the top and bottom has to offer to you. It is a mere tool to you for us to identify the market turning levels and market turning price levels in particular. After that, we have 185 version. 185 version is something wherein you would see we are, like it is basically a dynamic trend line kind of a thing. We use it basically just to identify the pullback. This is the high volume pullback which has been applied. You can have, like for example, mm, one second, let me bring out this thing. You can apply, first thing is normal price pullback, then we have low volume pullback, then we have high volume pullback, then we have big forex trade and buy sell zone, which is an advanced trading tool, wherein for people who want to have like uh, particular levels or particular buy sell zones. So for them, I have added 140, 174 and 188 into it. But my preferred tool is to use it for volume. So now how does this volume helps us in understanding accumulation and distribution? So if I hide all other indicators and if I just try to assess what would be an accumulation. Accumulation would be an area wherein there would be a transition of power or transition or exchange of hand taking place between supply and demand. So when the transition is taking place, we would see, as we are approaching downwards, we would see demand coming in. So this is a high volume. As I have applied high volume, you can see high volume is taking place. And now, after that, once a trend has been initiated, what would be will it is the tendency of the price, it will not go in a vertical direction, neither it will collapse in a vertical direction or in a vertical manner. It will go in a staircasing way. So sometimes the pullback may be of high volume, sometimes the pullback may be of low volume. If I apply low volume, we might see low volume pullback over here. Just for sake of understanding, I'll do it for you so that you will be in a position to understand what I'm trying to say. I applied low volume once. Okay. So if there is some low volume thing, then it would be there in it. If there is not, then it will not be there. Like for example, we have this low volume pullback, then we have price coming downward. It is more towards a kind of thing like wherein we see low volume pullback is normally used by the traders for catching trend continuation. So we don't, it is, this ribbon is only used as an dynamic trend line, and second thing for assessing the volume. So how do I use high volume pullback? Because whenever the price is going upwards, there is some degree of reaccumulation and accumulation or redistribution or distribution taking place. So we can make out things where the price has phase a distribution because of like phase analysis kind of thing or schematic. People are of a notion wherein they believe uh, schematic or like phase or accumulation based on schematic or distribution based on schematic would always refer to many different A, B, C, D, E phases. That is not the case. The main purpose of this, the which Wyckoff intended, was to help us understand the transition taking place or exchange of hand taking place from supply to demand or from demand to supply. This was the intention of Wyckoff. So if you keep this thing in mind, you would be in a better position to understand whether what has happened over here, what has happened over here, and what has happened over here. This was an accumulation. You can see accumulation taking place, and then prices going upwards. And same thing goes with here also. You can see price is going. You would not see any U-turn and you would not see any spring if you do, because for doing phase analysis, you always has to go for horizontal ranges, which is good, but not every time you will get it. So this tool will help you in identifying like, okay, now this demand is uh, pumping in, and we should be waiting for an up move, and then you can see supply came in, and then this was a gap, so price started coming downwards. So now coming back to this particular point, uh, in this particular chart of FCPO, because I've given this analysis, that's the reason I'm taking this thing. I normally trade XAUSD, which is gold spot. This was an like supply came into this particular level. We halted and we got a bottom one at this particular point. From this bottom, I'm expecting either the price come back and touch it, and I'm looking out for a buying opportunity at this particular point, or either price would break it and it will retest it, and I'm planning for a sell order over here. This is my simple trade setup. I don't get into more details of it because what my intention is to identify top and bottom levels with the help of 188 version, wherein new fresh price level price key price levels are formed. They are not SMC smart money concept, that it is not ICT or it is not any imbalance fair value gap, nothing like that. Whatever the price, whatever things are happening in the market is whichever is based on key price areas, key price and volume correlation areas, wherein there is high probability that we would see a turnaround in any particular trend or initiation of a trend or end of a trend. Those areas are of uttermost importance for trading any given market. So you would see this, all of my indicators are out of the box and they are not like they are non-conventional indicators, wherein smart money concept, ICT or other things like phase analysis and all this stuff. They are all old things which are not realistic. I'll not name them. If you are finding them useful, you can use it, no problem. But at least give what I have to offer, just give it a try. And I really mean it. Like you would be more consistent and more confident trader, and you would become a more confident trader after using this tool, because this brings you much more closer to the market. And unlike any other thing, market has its own language, and the language. If you are able to decipher the language and able to understand the language, then nothing like that. So coming back to the point, this was a supply, heavy volume supply, heavy volume supply, continuation of heavy volume supply. I draw a resistance across this one, heavy volume supply. Then we got demand, heavy volume demand. I extended a support from this particular point. And after that, this is an intermediate supply level, and I extended the line. Then I got this particular demand. I extended this level. So now I'm trying to see whether this which level is going to be of is will be held or would be respected or would be broken out or broken down. So this is how I do my analysis, which is very simple and very straightforward. I use high volume pullbacks to assess the demand and supply, and after that I use 155 version of tape reading toolkit to assess and dive into detail what actually happened on this particular thing. Like for example, we have a very beautiful demand, then this was a trend change kind of a bar, and after that we see demand and no demand taking place at this particular point. So this was a beautiful place to place your sell order with this as being your ultimate target. And price plummeted downwards, and then we have this kind of price behavior. So I don't want to prolong this video. Just this is it. This is a very unique tools and very like new tools which are being only introduced and like um, this is my observation of like 15, 16 or 17 years. So please give it a chance. You'll not regret. And if you want to be a consistent trader, uh, at least give it an honest try. And looking forward to seeing you in other videos. I'll keep on posting new informative videos. And good night and bye bye from my